So you're starting to see some of the things that we've been arguing about for a very long time actually come to fruition. So what are they doing? They're cutting a lot of costs. They're investing a lot of it back into the business to get the top line to look better, clearly by not losing as much market share. And they're dropping the rest of those cost savings to the bottom line. That's something we've been arguing, to your point, Sarah, for years to these guys. And it seems like they're finally doing it, bolstered again by a better consumer in the U.S. for sure.
I mean, what I kept pressing David on just a few moments ago is this sustainable? Are we going to see this kind of momentum? And he said, yes, within the business, but there's so much they can't control. They are on the front lines of a strong dollar, geopolitical tensions, emerging markets crises. China's doing quite well, but again, there are some questions about how strongly it is growing. So the question is, can P&G keep this up given what's happening around the world?
So I think P&G, because of the things it's doing specifically, even in the context of a very difficult macro environment, can do actually pretty well. The surprise to me a little bit more is how all of the peers, we were just talking about it, the Colgates and the Kimberly-Clarks and others, have traded up in sympathy, right? P&G's not losing market share anymore. That market share is going to have to come from somebody. So I'd argue that P&G can, at least on a relative basis, do much better in the HPC world, in this household personal care world. But I think it's going to be certainly tempered by what's happening from an overall macro environment. But P&G's doing a good job itself.
Ali, Sarah mentioned you haven't been the most positive on this name, and in fact, you've also embraced the idea it would be better, if I recall, certainly being broken up potentially. I remember a long report from you on that. Does execution and potentially the streamlining of decision-making that seems to have at least been reflected to a certain extent in their results this quarter change your thinking on that overall thesis?
So, look, one quarter is good progress, but it's not the end of the road. Our belief on the breakup remains, if they can't get all the cost savings out of the business, as such a big conglomerate that they are, then they should consider breaking up. This is certainly a step in the right direction. I'm happy to change my mind if they continue to deliver like this, but we'll have to see, right? I don't think it's the end of the road just by one quarter, which is, to be fair, a very strong quarter for them.
What kind of increases are we expecting in consumer products? They've talked about Pampers diapers and a lot of the paper-based products because of the rising pulp prices. How much is the consumer going to feel this, and at what time period?
Yeah, look, I think it's going to be a big pinch on the consumer. You're going to continue to see some inflation here. You're talking about in the 3 to 5% range of an increase. That's not in the U.S. That's not small, right? That's a really big increase. Now, to be fair, the commodities are up 50s and 60%. So it's a pretty small portion relative to what you're actually seeing the commodity prices increase. But you're going to see this to the consumer. You're going to see this certainly by the end of this year, if not the start of next year. The question is, will the consumer balk, right? In this better consumer environment, maybe the consumer doesn't balk as much, but we do expect to see some elasticities, i.e. we do expect to see some volume pullback, and that's going to be the thing to watch over the next little while. And frankly, I think David Taylor's hesitancy in terms of looking at guidance any differently than he has done recently.